In this video, I'm going to go over the recent spike in US crude oil prices, and then we'll also go over why I think oil prices could move much higher, and I will give you the three best stocks within the oil sector. So, with that being said, let's dive right in. So, we can see here that US crude inventories are at 40-year lows. That means in the US, we have basically as little energy as we had in our history almost. So, this really signals, that oil is very undersupplied at this point in time. Obviously, oil is just a market just like any other one, just a combination of buyers and sellers and demand and supply. When supply is low, that's going to force prices up. We can see supply was actually at 40-year highs 92 days ago, but we've seen that drop significantly, right? Actually, excuse me, not 92 days ago, in May of 2020, and we've seen that drop significantly, right? So, what do? Well, prices are going to go higher, right? That's really the only logical reaction to that. And then we can also take a look globally. We're at a major oil deficit right now. So we have the largest oil deficit in a quarter in history. So that just simply means, supply is not matching demand at the highest rate in history. I mean, this just tells you that oil prices are going to continue to move higher. I understand everyone wants to move towards sustainable energy and all that's great. The only issue is just look at the demand for oil. It's still massively there, and supply is pulling back a bit prematurely. So, when we take a look at the oil chart here, you can also see we got a golden cross back in mid-August, which is when the 50-day moving average crosses above the 200-day moving average. Basically just implies bullish momentum. It's a very important signal. So that obviously signals that prices could move higher. How high? Well, in the short term, I think we'll probably see prices pull back from this $94 level. As this is where oil had topped out in November and in October of last year. So that's kind of what I'm seeing for oil right now, is that we come up to this resistance level, possibly consolidate a bit. But if we were able to break through that level, there's really nothing stopping us from moving up to about $124, which, over the coming months, I could very well see, especially as we kind of move into the summer heating season, right? Natural gas probably has a good winter, if I had to guess. So $124 oil would not be out of the realm of possibility whatsoever. Like I said, in the short term, we probably see some consolidation around 94, but in the long term, I really could see $124 oil once again. But let's take a look at three stocks that I think are going to take massive advantages, or excuse me, are going to use this spike in oil prices as a massive catalyst for their companies. The first one is Calian Petroleum. So CPE, this company is a Texas-based company. It's basically an exploration company. So they're basically looking for oil in Texas, and they've found a bunch. They're massively expanding too. One thing is kind of, while most oil companies were diversifying into carbon capture, into wind, this company was really doubling and tripling down on the U.S. oil production. So that bet is only going to help this company in the future, and we really see it with the numbers here. So this company has a 3 times PE. That means for every dollar invested, investors are for every $3 of for every dollar of earnings, investors are willing to pay $3. That's kind of what that 3 times PE means. And in CBE's history, we've had a 6 times PE. So we're trading below the company's historical valuation, and we're also below the sector median of 8 times. So this company's trading at a massive discount relative to the sector and relative to its own PE, its own historical PE. And then we take a look at price to book. We see that price to book is at 0.67, which means that the market cap of this company is greater than the value, or excuse me, the book value of this company is greater than the market cap of this company. So, a price to book of under 1 signals a significant discount for an asset. So I really do think this company, their financials are just amazing and really just signal a massive opportunity. The 5-year price to book ratio has been about 1.07. So definitely signaling that the company's trading at a discount relative to the sector and relative to their own history. So on a PE basis, on a price to book basis, this company is extremely cheap. And then if we were to take a look at their growth numbers, obviously they've been investing massively, right, in U.S. Crude oil production. Unfortunately, growth for the past 12 months is negative, but we're projected to kind of turn that around over the next 12 months with a 5% growth rate. So growth doesn't look great for the company, yes, but at the end of the day, we're really buying this company. I'm really considering this company because of their amazingly cheap valuation. And then let's take a look at the profitability for Calian Petroleum Company. So we do have a gross profit margin of 65%. For those that don't know, gross profit just tells you what a company makes for what it sells. Simply just revenue minus cost of goods sold. So this 65% number is actually a pretty good number and does signal that this company has pretty good profitability metrics. And we also have a net income margin of 38%, which is well above the sector median and even above CPE's 5-year average. So overall, the company's in a really, really good spot from a financial standpoint. Also, like I said, this company is massively expanding. It's been expanding its oil production since 2020, and it was doing it while other companies were investing in carbon capture and kind of moving away from oil, right? So definitely a good signal for this company. And then with that being said, let's take a look at the chart and see if we can't give a logical price prediction. So right now we're trading above all daily moving averages, which is a good signal for this company, signals bullish momentum. We see a pretty massive, strong level of support at around $30. And then really where are shares headed from here? Well, I think they're definitely headed higher. And a large part of that is because we just had a golden cross, which is when the 50-day moving averages cross above a 200-day moving average. And that just signals bullish momentum, just like we saw in the U.S. oil chart. So, big signals of bullish momentum for this company, which is a good thing. And then, really do think we use this 50-day moving average as support, and we see a continuation of this move higher for CPE. Where do we go? Well, I could see a quick move up to about $45 for this company. So, we're at about $38 right now. So really could see a continuation higher. Like I said, up to this next level of resistance, which is where shares had topped out in 2020. Actually, in 2022. I think we hold this 50-day moving average and move higher up to $47 over the coming weeks for this stock. And then with that being said, let's take a look at our next stock, Petrobras, which is the best way to play the oil bull market according to James Ford here on Seeking Alpha. So I'll go through some of the fundamentals and I'll go through their financials. This company has a 23% dividend yield, so it's very intriguing. It's a Brazilian-based company, and Brazil's political and economic situation remains strong, and the company is set to improve their growth. So the company has recorded a strong Q2, and Brazil's political and economic situation continues to be strong, all while oil prices strengthen on the back of more OPEC cuts. PBR is a part government-owned company in Brazil, and though many American investors have doubts, the performance speaks for itself. Firstly, from a purely fundamental perspective, PBR is much cheaper than its competitors. So, given this company has the backing of the Brazilian government, right? The Brazilian government literally has a stake. That really should signal to you that they're going to, do what they can to help this company, right? Because it's in the best interest of the country. The company reported 11.7 billion in required adjusted EBITDA, down almost 15% from the prior quarter. You see this segment breakdown. So yes, their past quarter wasn't the best, but I still do think PBR is a massive opportunity, and a large part of that is because they are expanding their search for oil. So in the last few months, we have seen a string of bullish news from the company. Just a couple weeks ago, Brazil's Attorney General opened up the possibility of exploring the Amazon area. So they have basically an Amazon forest there, and they opened up the ability for that company to look for oil in the Amazon. And then also coming from the company, we are going to build a sustainable renewable energy matrix, but it's obvious that we need to continue to fund that transition process. So yes, they're looking to expand to renewable energy, but they're still staying true and kind of staying logical and saying, hey, it's not really ready yet. And with that being said, let's take a look at the financials for PBR. So PBR has a PE of 3 times, which is obviously very cheap, and it's below the sector median of 8, and it's also below their 5-year average of 7.9. So the company's trading at a discount relative to the oil and gas sector and relative to its own history. And then when we take a look at price to book, we have a price to book of 1.28, which is below the sector median. And then obviously we have a massive dividend yield of 23%, well above that sector median of 3%, and PBR's 5-year average of 4.3%. And then we take a look at growth here. So growth over the past 12 months was negative, unfortunately, but for the next 12 months, we're projected to see growth at 4%, which is definitely good to see that company kind of turning things around. And then gross profit margin is at 50%, which is above the sector median and above PBR's 5-year average. Net income margin as well is above the sector median at 26%. Which is above the sector median, which is at 14%, and then they're also above PBR's 5-year average of 15%. So definitely good signal there. Looks like this company's in a great spot. And then let's take a look at the chart here, just like we did with the other one. So we're trading above all daily moving averages, which signals bullish momentum. We also had the 50-day moving average cross over the 200-day moving average in June, which is a golden cross, signals bullish momentum as well. I do think that we likely see a continuation higher up to this resistance level at about $16. This is where shares had topped out last year in October and in May and in April. So, wouldn't be shocking to see the stock kind of top out again at this level. If we're able to break this level, well, we could see a massive move higher. So be on the lookout for this level. Make sure you're definitely, kind of drawing this on your chart here. But like I said, it definitely looks like a level of resistance. So I think in the short term, we get a move up to $16. Do we break it? Do we not? It's really a tough one to call. But I be on the lookout for that break here. Set an alert. If you see the stock over, $16.20, it's probably going to be an amazing breakout buy. And then let's take a look at Silverbow Resources, which is a oil and gas company engages in exploration, development, and acquisition and operation of oil and natural gas properties in Austin, Texas, South Texas as well. Or excuse me, just South Texas. So this is another company, U.S. oil and gas exploration company, means that they're looking for new gas. But my real reason for buying this company isn't really the fundamentals, it's the financials. So they have a 4 times PE, which is well above the sector median at about 8. And then they also have a price to book ratio of 0.87, which is above the sector median and above the company's 5-year average. So once again, really favorable PE and really nice looking price to book ratio. And then growth in this one is very solid. So this is the best name we're going to look at in terms of growth. So they had 25% revenue growth over the past 12 months, which is above the sector median. And then revenue growth for the next 12 months, which is really intriguing, is at 45%, which is above the company's 5-year average and above their sector median. So with that being said, let's take a look at profitability. So we have a gross profit margin of 85%, which is, like I said, just revenue minus cost of goods sold. Tells you what a company makes for what it sells. So this 85% number is above the sector median of 48. Also, the net income margin is 61%, which is well above the sector median and well above the company's 5-year average as well. So amazing numbers there. So with all that being said, let's take a look at Silverbow's chart. So this chart's very intriguing. We're coming down to support at around $35, which is where shares had seen some consolidation in 2022. It's also where shares had topped out in October of 2021. Past resistance becomes new support. I believe this level at around $35 could act as support for the company. And we could see a move higher over the coming weeks for the stock. So that's kind of what I'm seeing on this chart. Also, we're coming down to oversold levels according to RSI, which could lend additional support for Silverbow Resources. So I think this name likely holds this level and continues higher up to at least about $43 over the coming weeks for the stock. So with all that being said, I hope you enjoyed the video. Massive opportunity within the oil and gas space. Definitely do your own research in these companies. Let me know what you think of these companies below as well. But with that being said, I will end the video there.
If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.